The future in life sciences brings you Asia Squawk Box.
I'm Andrew Stevens. Japanese investors looking for a second day of gains today on the back of hopes of a new fiscal stimulation package.
And I'm Cecilia Zecca. Spain cuts interest rates and sends European stock markets sharply higher. Good morning, everyone, and welcome to this Wednesday edition of CNBC Asia Squawk Box, coming to you live from Singapore, Hong Kong, and Tokyo. Leading our business headlines at this hour, well, a cut in Spanish interest rates overnight. The Bank of Spain lowered a key money rate by a larger than expected 50 basis points. The move sparked stock market rallies across Europe. The Dow also rose, but later gave up some of those gains. The Bank of Spain governor says that the rate cut was to bring rates closer in line with core European rates ahead of the launch of the euro in January. Looking at Spain's leading share index, the index jumping nearly 6% overnight. While other European markets also reacted positively to the Spanish rate cut, as the move fueled expectations for more rate reductions to come. In London, the FTSE 100 index scored its biggest one-day gain in percentage terms in 6.5 years. The FTSE up 4.5% to finish at 4,854, bouncing back from Monday's 14-month low. A strong rally also in Frankfurt, the DAX 30 also gaining 122 points. That's a gain of 3% to close at 4,156. And in Paris, the CAC 40 also rising 5.3% to finish at 3136. Well, a mixed day for stocks on Wall Street, on the other hand. Blue chips surging more than 150 points in the early going. That was on hopes for global interest rate cuts. But a sell-off in technology stocks and worries about weaker corporate earnings took the steam out of the bull run. The Dow finishing up just 17 points, or 0.2%, to close at 7,743. The tech-heavy NASDAQ Composite Index down almost 2% to finish at 1,511. And looking at the broader market now, the S&P 500 also 0.5% in the red, losing about 4 points to close at 985. Looking at the bond market now, U.S. Treasuries also edging lower overnight. The yield on the 30-year long bond down to 4.726%. As U.S. stocks lost ground, the dollar's fortunes also nosedived. The currency fell against the yen and the mark. Earlier, the dollar was ahead against the German currency, but a warning about a global recession from the German Economic Research Institute took the wind out of the dollar sail. An official from the European Central Bank also said that joint rate cuts in Asia, Europe, and North America may not be the answer to the world economic crisis. Let's take a look at dollar yen now. So you can see the dollar is at 129.95 against the yen. Dollar mark at 1.6315.
I am confident that if we act together, we can end the present crisis. We must take urgent steps to help those who have been hurt by it, to limit the reach of it, and to restore growth and confidence to the world economy.
Well, U.S. President Bill Clinton renewed calls for efforts in restoring economic stability at the opening of the annual IMF World Bank meeting in Washington. He says that the world is facing its most serious financial crisis in 50 years. World leaders there have expressed concerns that the global financial crisis may get worse. IMF Managing Director Michel Camdessus says it is now the system in crisis, not just countries in crisis anymore. Ministerial groups are recommending transparency, accountability, and banking sector reform to combat the problem. All right, now let's introduce our guest host this morning. He is Andy Tom. Andy is General Manager and an economist at Standard & Poor's MMS International, based here in Singapore. Andy, tell us, what do you make of that Spanish rate cut? What do you think it signified?
Well, I think if you look at the, going back to the previous G7 statement, I think there has been a sign that they are ruling out at the moment any coordinated form of rate cut. So in that sense, I think if you look at the rate cut by Spain, I don't think it is an indication that the G7 are ready to move in the direction of a coordinated rate cut. What is more likely to have happened in Spain is that there is a need to bring Spain's interest rate in line with the rest of the European economy. you have the euro coming up in January next year, and that is just 3 months from today. So in that sense, there is a strong need for Spain to do what has been done.
Andrew's got a question?
Yeah, thanks, Cecilia. Andy, I'm just curious, what's the linkage between sort of interest rates in the US and Europe? If you've got the euro, the new European currency coming in and separate economic cycles, is there much of a link between the US and European interest rates?
Well, I guess if you look at the, in terms of as far as international investors are concerned, there's always such a thing as a yield carry, a yield play. So in that sense, investors would go to the place with the, the best yield, best risk return. So in that sense, if you have a case of interest rate in the European community coming down and U.S. interest rate remaining firm, then what you're likely to see is capital flowing back to the U.S. and vice versa.
Andy, one of the G7 countries that is expected to lower interest rates is the U.S., even though you're not expecting a coordinated joint interest rate cut. That certainly, a U.S. interest rate cut, more rate cuts to come, certainly do not bode well for the dollar.
Well, in fact, that is quite true. If you look at the strength of the U.S. dollar over the last 16, 18 months, it has been helped, first of all, by a steady interest rate. At the same time, it has been helped by strong economic growth, booming stock market, property market. So those are all factors which has helped to stabilize the U.S. dollar. In fact, allowing the U.S. dollar to rise sharply against the yen, which is practically at zero interest rate.
With the dollar at 129, 130 against the yen, how low do you think the currency can go?
Well, I think in this case, you have to look at the plum in Japan as well. And even though we are seeing a retreat of the U.S. dollar against the yen over the last 3-5 weeks, the fact of the matter is that Japanese economy is still in pretty bad shape. In fact, the economy is expected to get worse in the fourth quarter and throughout the first half of next year as well. So given the weakness in the Japanese banking sector, the low confidence in the market, the low consumption by the Japanese consumer, it's hard to make a call on the Japanese yen right now. I think you could see the dollar yen trading between the 120 to the 140 level over the next 6 months.
Anywhere from 120 to 140 over the next 6 months. Quite a bit of a range there. Well, what does that mean for Asian currencies, then, that have been following both either the dollar or the Japanese yen?
Well, there is a correlation between the Asian currency and the dollar yen. So it is not a coincidence that you have the dollar yen going up to the 135, and you have at the same time the dollar Sing, dollar won, dollar Taiwan, dollar peso all rising up at the same time as well. So if you have the dollar yen coming down, which means that the yen strengthening against the dollar, then that in effect will reduce some of the pressures on the Asian currency. So if the dollar yen fall back to 120, you could see like dollar Sing dropping back to 160, and maybe the dollar baht dropping to 38, 37.
160, well, that really cheers me up. Andy, we'll talk a little bit more in just a second. Now, though, let's toss back to our Hong Kong newsroom and talk to Andrew Stevens, who is back from another holiday in Hong Kong. Andrew, what kind of stocks are you watching for us this morning, now that I'm peeved at all?
No, I'm not sure if I quite like the tone of that, Cecilia. I'd just like to say, my holiday, I didn't queue up yesterday for a Snoopy doll. I think I was about one of the few people in Hong Kong who didn't. So just to let you know that I was actually out there having a good time. Right, where are we? Tokyo. Well, big moves in Tokyo today, not surprisingly perhaps. The market's up 230-odd points so far. That was after a pretty good rally in London overnight. Nikkei stocks trading in London, also the futures market in Chicago, also all pointing the way up. And just the market has opened fairly strongly today, up it's now up 263 points. And then powering ahead. Look, it's all on my screens. It's all green, which is pretty strong start. A couple of stocks I wanted to talk about, Cecilia. Really, I just want to start with Japan Tobacco. Japan Tobacco is actually it's up 10,000 yen at 969,000 yen, I should say, this morning. That's on the back of new plans, really, but from the government to introduce a new tax on cigarettes. Now, this is an interesting one. You would think that would actually take the shine off of Japan Tobacco share price, but obviously it hasn't. What they're looking for now is diversification away from cigarettes, cigarette manufacturing,